What's up, guys? I'm Jeff Montgomery and welcome to Tax Planning on the Whiteboard. We have a super quick whiteboard video for you today, and it's simply a tax brain teaser. So let's quickly go to the whiteboard and check it out. Okay guys, on the whiteboard today, we are going to simply do a tax brain teaser. Can you get the right answer? So we're going to take a look at Bob. Bob is 64 years old. We're going to make that assumption, 64 years old, and Bob has recently retired, okay? Now, Bob wants to take a trip across the country to see his grandkids. So one other assumption here, Bob is single. Bob is not married. So let's put that up there as well, and we'll throw up the single tax brackets here on the right-hand side so you can see that. So Bob wants to take a trip across the country to see his grandkids, and let's just assume Bob needs $1,000 to make that trip. So currently, right now, Bob is in the 22% tax bracket. He has $42,275 of taxable income, okay? That's taxable income. That's not gross income. That's after deductions, and not all Social Security is taxed, which is what we're going to get into here. So this includes $38,000 of IRA income. So Bob is taking out $38,000 a year to survive from his IRA account. We know IRAs were all pre-tax, so that is considered taxable income. And it also includes $25,000 in Social Security benefits. So we can see this right here. We can see $38,000 plus $25,000 obviously does not equal $42,275. It equals $63,000. So that's gross income. We have to subtract deductions. And again, not all Social Security is taxable. So his taxable income is $42,275, which if we go over here and we look at the tax bracket, that puts him exactly in the 22% marginal tax bracket. So what that means is an additional dollar of income should be taxed at 22%. Makes sense, right? So again, Bob's going to tap his IRA for that $1,000 trip. So he needs an additional $1,000 income. We're going to assume Bob doesn't want to go back to work. He doesn't have any other accounts that he can pull this $1,000 out of. So he's going to pull it out of his IRA. So the question is, how much does Bob owe in taxes on that additional $1,000 that he pulled out of his IRA? Stay tuned for part 2 on this tax brain teaser series, and we'll get into that. We'll explain exactly how much he owes in taxes. Did you get the answer correct? This has been Tax Planning on the Whiteboard. I'm Jeff Montgomery, and we'll see you next time.